Okay, so uh, everyone wants to hit it big, right? Open up Robinhood and bam,
Yeah.
suddenly you're swimming in cash. Like, who hasn't thought about that? But you know those stories, the Robinhood millionaire thing?
Right.
It's tempting to think, well, maybe investing really is that easy.
Yeah, and this article, it's by Tibid Beltus, our fintech guy for the day. Well, he claims to have the ultimate guide to, you guessed it, Robinhood riches. But we're
Fingers.
going to dig into that today, not to give you like a get rich quick scheme or anything, but listen,
Uh-oh.
knowledge is power, right?
Like,
Especially when it comes to your money.
exactly.
Yeah.
So Beltis, he jumps right in, and he's talking about two ways to build wealth on Robinhood.
Mm.
Capital gains and dividends. Capital gains, that's the classic buy low, sell high.
Right, right.
But how often does that actually work out?
In theory, sure, it sounds good.
Yeah.
But I always say it's like timing the perfect wave, if you're surfing. Even the pros wipe out. And everyone's trying to jump on that same wave. Someone's left holding the board when the music stops.
Oof. Yeah, no one wants to be that guy. So then there's these dividend earnings. That's where the passive income dream is. Or
Dividends can be great for passive income, but it's not just picking any random stock that pays them. Think of it like this. If you're renting out a property, you wouldn't just pick any tenant, right? You want someone who's going to pay their rent on time, be reliable.
Mm.
Dividends are kind of the same.
So we got to be picky about our financial tenants. Got it. Well, Beltis really stresses research, especially for the long term. Understanding a company's fundamentals, all that. But realistically, how much research is enough?
Well, I mean, it's always good to understand the basics, right? But there are resources out there. I'm talking reliable financial websites, industry analysis, heck, even a financial advisor. They can help you understand the potential of a company. You don't need to be like an accountant or something.
Definitely. Just blindly trusting some tweet. Probably not the best move. Now, Beltis is big on diversification, too. Don't put all your eggs in one basket and all that.
Right. Diversification, that's like investing 101.
It makes sense.
It's like, would you bet everything you own on one hand of poker?
Only if it was a movie montage.
Exactly. Investing's about managing risk. And a good portfolio spreads that risk around different assets, sectors, all that.
Not just relying on one single hot stock, basically.
Yeah.
So you're spreading things strategically. Now, this next part, this is where it got interesting to me. Beltis talks about reinvesting your earnings. And he calls it, like, unlocking the power of compounding.
He's not wrong. Compounding, basically your money making more money, which then makes more money. It's that snowball effect. But, instead of snow, it's your wealth growing.
Okay, now it does sound like magic.
Yeah.
But there's a catch, right? Otherwise, we'd all be sipping mocktails on our yachts or something.
Here's the thing. Compounding can go both ways. If you're reinvesting in stuff that's not doing well, you're compounding your losses. So that snowball, it's picking up speed, getting bigger, but it's not pretty.
Okay, I'm getting a very vivid picture here, and I don't like it. So yeah, the potential's exciting, but you got to make sure you're invested in something that's actually, going up and not down.
Exactly. If you don't know what you're doing, it's like throwing darts blindfolded. Might get lucky, might not.
So compounding, definitely a powerful tool, but not a free pass to easy street. Which brings us to something else Beltis mentions, this Robinhood Gold thing. And margin trading sounds intriguing, but also kind of risky.
Yeah, margin trading. It's a little like, in those movies, someone bets everything they have on one last hand.
I've seen that movie.
Could pay off big time. Or it could go very, very wrong.
Okay, so definitely needs a closer look. For those of us who haven't, actually gambled with our investments, what is margin trading?
So say you want to buy, let's say, $2,000 worth of stock, right?
Yeah.
But you only have $1,000 in your account. With margin trading, Robinhood, they're basically loaning you that extra $1,000 so you can make these bigger trades.
It's like having a friend spot you at the casino. Tempting, but I'm already nervous. What's the catch?
The catch is, if that investment tanks, you don't just lose your initial $1,000, you lose what you borrowed too. Plus interest, maybe even fees. It can snowball fast.
And not in the good way.
Yeah.
Okay, suddenly that friend seems a lot less friendly. So margin trading, maybe not for beginners or the faint of heart.
Exactly. Like you wouldn't jump into a race car without knowing how to drive. Right.
Good point. So every path to riches has its risks. Which makes me think about all those Robinhood success stories. People turning a couple $100 into like life-changing money overnight. What's the deal with that?
Those stories are definitely attention grabbing, I'll give you that. But it's like, think of it like a highlight reel, you know?
Yeah.
You're only seeing the best parts. For every person who hits it big, there are tons who lose money.
It's like watching a magic trick and thinking you could do it too, just because you bought the same wand.
Exactly. You got to be realistic, you know? Think long term. Now, Beltis does get into some more, shall we say, advanced strategies, like selling options, which honestly, even I find a little confusing.
Yeah, options trading always seemed like, I don't know, a secret club you need a password to get into. What is it exactly?
I'll try to keep it simple. Basically, you're giving someone else the right, but not the obligation, to buy or sell a stock at a specific price by a certain date. It's a way to potentially make money off market swings without actually owning the stock.
So you're betting on which way the price will go, but without the actual buying part. That seems even riskier.
It can be. High risk, high reward, as they say. Definitely not for beginners.
Got it. Don't try this at home, kids, unless you've got, like, a financial advisor on speed dial. Now, there's another thing Beltis mentions. Share lending. Sounds simple enough, but something tells me it's not as easy as it sounds.
You're right, it's not just lending out your stock like a library book. It's more like you're lending your shares to another investor, usually for a fee, and they might be looking to, well, short sell that stock.
Hold on. Short selling. Now, that sounds even more complicated than options. What even is that?
Basically, you're betting against a stock. So you borrow the shares, sell them at the current price, hoping it'll go down. Then you buy them back later at that lower price, return them, and boom, you pocket the difference.
So it's like the opposite of buy low, sell high. You're trying to sell high, buy low. My brain's doing financial backflips right now.
Yeah, it's a lot. Definitely something that needs, careful thought and a good understanding of how the market works.
So both options trading and share lending, they might make you some extra cash on Robinhood, but maybe not for beginners.
Exactly. You wouldn't climb Mount Everest without, learning how to climb a hill first, would you?
True. So yeah, Robinhood might make investing easy to do, but that doesn't make it easy. Knowledge is key. So I'm noticing a theme here. Robinhood's like super easy to use, but that doesn't mean investing is like a walk in the park.
Right. There's real risk there.
Yeah, definitely not something to take lightly.
It's like you see a chef make something amazing, right? Doesn't mean you can just whip it up without a recipe.
Exactly. And speaking of things that sound too good to be true, Beltis throws this out there. He says you can make money on Robinhood with just $100.
$100?
I know, right? Like in this economy.
It sounds crazy, but he's actually onto something there. Fractional shares. That's the key.
Fractional shares. I've seen that on the app, but
Yeah.
to be honest, I have no idea what that even means.
So basically, it's like this.
Yeah.
You can buy parts of a stock, even if you can't afford the whole thing.
Oh, okay.
Yeah, so like imagine a company, let's just say a big tech company, right?
Right.
And their stock is like $3,000 a share.
Yeah.
Exactly. But with fractional shares, you could buy, say, $100 worth. So you own a little piece of that company.
So even with a small amount, you can still get in on the action.
Yeah, exactly. It makes investing a lot more accessible, especially if you're just starting out.
That's actually really cool.
But here's the thing. Just because you're buying fractional shares doesn't mean you should throw all caution to the wind.
Right. The same rules still apply.
Exactly. Do your research, pick companies you believe in, all that good stuff.
So it's more like building a solid foundation over time, not trying to get rich quick.
Exactly. Slow and steady wins the race, right?
Makes sense. So our Robinhood Riches Guide, it might have started off sounding like a shortcut, but the real lesson here is way more nuanced.
Definitely. Robinhood's a tool. A powerful one, sure, but it's not magic.
Right. You got to know what you're doing.
And be willing to learn as you go. It's a process.
Exactly. So to our listeners out there, with your $100 and your Robinhood app ready to go, remember, knowledge is power.
And don't be afraid to ask for help. There are resources out there.
So keep learning, keep asking questions, and most importantly, be realistic.
The journey to financial freedom, it's not always going to be glamorous.
But it's definitely worth it.
Couldn't have said it better myself.
And on that note, that's a wrap on this deep dive.
Until next time, happy investing, everyone.